This market action has you busy, I'm sure. So what are clients asking? What are their concerns? What are the opportunities they're trying to find right now?
Well, clients are simply asking what to do. And what we're saying is that we need to take a very long-term view. But in terms of being tactical, whether this is a buying opportunity, we probably want to wait and see for the next few weeks to see how the situation unfolds. Because the two drivers of this sell-off, arguably, are the Fed normalizing and, number two, trade wars. So much will be determined in the next few weeks in terms of trade wars.
So I shouldn't just go jumping in right now and buy the S&P 500 or buy a Dow ETF or anything like that. I should wait for a few weeks. Is that how the strategy goes?
Well, you shouldn't sell off.
Okay.
And I would suggest you wait and watch for how this situation unfolds. Because these are two pervasive risks we've been warning about all year. They just happen to be coming to fruition at the same time. The reality, though, is that trade wars could go on for some time. And that's what some companies are messaging in their earnings calls. And so they may be shifting and changing behavior as a result. They may be expecting input costs to increase going forward for some time. So we could, though, have a change of heart by either the U.S. or China, most likely the U.S., after midterms.
What are the tea leaves that you're watching? I mean, what is it? The semiconductors? We've been talking so much about that. Home builder stocks have been in a downtrend. Financials can't find a bid to save their lives right now. What would you be looking for a possible turnaround scenario?
Well, it's nothing actually coming from earnings, because my expectation is we're going to continue to see what we've already seen, which is that about a third of companies in their earnings calls are talking about the impact of trade wars. Companies like UPS that have actually had strong earnings but are saying we're seeing some kind of a deterioration in our international business because of the trade wars. So I'm not so much looking for that. I'm looking for a change in U.S. trade policy, because if it continues on the current course, it could be a continued erosion. Now, of course, some companies are more capable than others of shifting their supply chain. And we're already starting to hear that on earnings calls as well. So they may be able to dodge and mitigate some of those input cost increases.